probabilities. I mean, if you're trading options, especially, you play probabilities. You know, you're, I mean, you can speculate on anything you want, do it with defined risk. Options is a great way to do that. Okay, we've got about 13 minutes. Theme today, Technical Tuesday. I did want to highlight something. So yesterday, daily profit play. Also discussed waterfall income. We had a live session yesterday. Placed one of my core strategies Monday session 12:30 p.m. That class should have been posted already. This week on waterfall income, we're doing a 3-day workshop. So we have the live trading session. So that was from Monday. This week, Tuesday, Wednesday, Thursday, we're doing a 3-day masterclass workshop. Tuesday and Wednesday and Thursday, and we'll run those at 1:30 p.m. Eastern Time. So join me today for some waterfall income. Past members, new students want to jump in and see what this trade's all about. We're winning 93% of our trades. We've logged over 100 trades together, and we've got to me, this is like my retirement strategy. Obviously, I want to scale it up or down when it becomes that. But literally yesterday, I took this trade on 16 accounts. So I mean, I placed almost 40 trades yesterday, and a lot of those are waterfall. So that's today. Double ups. I'll do a video this week for double ups. Just an extended educational video on a trade that I took yesterday. We discussed it last week in the masterclass workshop. We had a 3-day masterclass on double ups last week. We've got some pretty good levels to trade towards. I just don't have a lot of direction necessarily. It's like we could just stay right here all day around 64.50. We could come down here. We can come. I mean, price is going to oscillate a little bit. I would imagine that today looks pretty good. If this is defended, today looks pretty good for a standard daily profit play. Okay, so I will probably kind of level myself in here, see where the deltas are at. If price comes higher, then I'll start leveling in some more. So I'm still trying to, establish this like call wall and this resistance level. I think the market rolls over just a little bit. I think 6,500 should offer some decent resistance for it. I mean, honestly, it should offer resistance until the end of September because that's a huge quarterly expiration for JPM. Like JP Morgan's investment firm, they have a huge call wall at 65. We haven't seen price breach it. Like these are our highs. We haven't hit 65. So we'll see what happens today. Okay, and then is price going to stay kind of right around the 64.50 zone? That's where it was kind of sticking to yesterday, maybe up to 60, 65. I want to see where the deltas are at, see if we can get some better premiums. I wouldn't mind selling, I know potentially this high would be like 65.05 or 10, but if the VIX is going to stay at 15 and then possibly the VIX goes up, then we might even have prices going lower. But keep an eye on it. Let's say we go down to today's floor. Let's say we hit like 64.40, 64.35, and then we go up for the day. Well, we'd have to go up exactly that 0.95 in order to hit some fresh highs, and we'd have to go from the bottom. I mean, do we have a major catalyst coming today? Not necessarily, like no major news. So I could see us like stalling and struggling to hit new highs, and also like maintaining bid and being contained at these lows. Okay. As move you look for happen with a certain time frame, you look for the charts all day to make a trade. I mean, kind of the latter. I mean, I'm here all day. So for what particular trade, David? I mean, for the daily profit play, I'm trying to trade in the morning, and then as the day unfolds, I kind of get a better sense of, case in point would be if prices are here, 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 let's say until like 11 o'clock, and then price starts to break this out, then I can probably put in a trade at that low and see price just go up for the day, right? Or we're here, 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 and then it breaks lows. Well, maybe we pull back again, hit resistance, and then finish low for the day. It's a little price action read for the day. I'm not always right, but when I have at least a starting point that gives me some big liquidity levels, it helps me make some pretty informed decisions. Okay, give me 1 second. Posted a video. Let's go. Yeah, that is weird. That's crazy. I just posted a video yesterday that I realized the capture was so weird. Right. Yeah, daily profit. Yeah, so the goal is I try to get in at the beginning of the day for this reason. Beginning of the day, usually between about 9:30 and 10 a.m. When the opening bell kicks in, that's essentially where you have your highest expected move. Now that doesn't mean the market's always going to stay within this point, right? This like 21 points for the day. We started at 21 points and then through the day it gets less and less and less and less. That's not never the case, okay? This is a market maker move that's expected. As the day kind of unfolds, usually we can see the market maybe go 30, 40 points up and then pull back 20 points, staying within that plus 20, 21. We can see the market go 30, 40, 50 points, pull back or bounce and finish within that kind of open to close around 21 points. So usually, if you're looking at this level, this is around 21 points and 21 points. Okay. So if the day is going to give you a general direction, then if price is going to go, let's say, let's move this chain around so we can go. If price goes higher, so we're at 64.50, if price goes higher, you can see my strike price is getting higher, then, if price is going up for the day, this entire red shaded zone will also shift. Okay. But a general point would be if you remember, okay, we're starting here around 64.50, we have an expected move low around 64.30. So that's a pretty good spot if you wanted to do like a put spread to participate in a bull put spread, right? You can do a debit spread or a credit spread to take that trade. So what does that do? Well, price is going up. That means we're not going to hit this expected move and we stay, at least at 64.50 for the day, right? Maybe we go up a little bit directionally and then we can see some profit. So the reason I take these trades in the morning is usually this first like 30 minutes. It typically is a lot of indecision. And indecision is perfect if I'm selling premium, especially for daily profit play. So if we go back on a chart like this, okay, we had a wild start to the morning for about 15 minutes and then dead for the whole day. We had a start for the morning, it came back and recentered. That's a win for the day. This one was up and then back down. That's a win for the day. Okay. This was actually a win for the day. It went up and went down and went up. That was centered for the day before it continued to go up to the highs of the day, which is that CPI day on Tuesday. Still was a winner for daily profit play. Before that, started out very choppy, winner. This is like the only time I don't love a directionally neutral strategy is when price does this all morning. Okay, but to be fair, later in the day it did come back down. That was offering a win. So we still won the day, even though it would have tested and threatened the upside of the trade. Okay, over here, there was enough indecision before the market fell. That was good enough for a little profit play win. Over here, same thing, right? That little churn down, up, center, center, right? Price didn't really move anywhere. This one was up a little bit, down a little bit, recentered. These are all winners in the mornings. Again, kind of worst case scenario, price goes up all morning for the first like 30 minutes. So this is opening bell all the way to like 10 o'clock and then went dead sideways. So I mean, does this mean like, well, Chris, can we avoid that? No, because if I did the trade right here, I'm going to collect way less premium, although I could make that a winner. Okay. Um, it's just sometimes it's not perfect. Most of the time, the market is perfectly choppy, perfectly neutral, and we can get our highest level of premium at the start of the day, right? And usually, if the market's going to find some flow for the day, then that flow is typically, after 10 o'clock, after 10:30, 11 o'clock. This one here, down for the morning, back up, it's a winner. This one down for the morning, back up, down for the morning, back up, it's a winner. Sideways for the entire morning, that's a winner. Like that's what daily profit play is almost every single day. Sideways here, winner. 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 Okay, down for the morning, came back up to center, winner. Up all morning, sideways. This would have been a tough one because it threatened, but it stayed there all day and then finished the day back to neutral, winner. Okay. So the most important thing for daily profit play is if you're going directionally neutral, trust the process. Price action market makers, they've been doing their job for 70 plus years. Okay. So who are we to think like, oh, we got it all figured out? No, I mean, they do their job. Sometimes it's challenging, but it's all about risk management. Okay. Um, you previously suggested stop loss limits. Yeah, now I just decided it's better to trade with the spread that you're comfortable with. So if you don't want to risk more than, 350 to $400, take a five wide spread. It's that simple. And then you can scale it. So if you're comfortable risking $1,000, you can, go 10 wide. If you're comfortable risking $1,000, you can go two contracts five wide, you know. I think risk management is the most important thing with the strategy and our highest win percentage. If you want to win 93, 94, 95% of these trades, you let them play out for the day. Okay. You let them play out for the day. And anyone that's traded daily profit play, you understand that sometimes the day, if it starts out like, okay, let's say today just directionally goes straight up, and then it goes sideways, and then it goes up, but it comes back for the end of the day. As long as it's not above or beyond your highs and lows, you can make money, right? And then worst case scenario is if you do take a loss, which rarely happens, but if you do take a loss, it's risk defined and it's managed, and you go trade the next day. And it takes you five, six, seven trades. You get back on top. This loss is then taken care of, but you trade through it. Okay. Market makers buy and sell all day to close. In a zero day environment, they certainly do. I think that's why we have a lot more stability in the markets now. Is it's hard to get like a really big outlier type move. That's why I mean pretty confident calculating our highs and lows of the day. In fact, I don't think from any of these VIX Rule of 16 levels that I've done for the last probably month or so that we've seen any level that I posted with either this, yes, there's yesterday's close, but we're also doing like two levels. We have based on the previous day's close, and then we also have the modified, like if we have a gap here, then I'm going to shift this one down, right? And I'm going to shift this one down. If we have a gap higher, I'm going to shift this one up and then shift this one up. So there's two levels based on the close and then based on the open, right? And then I kind of tweak it based on like intraday price action. So if I'm trading throughout the day, I still use the VIX level. So we're trading right around 15 VIX right now. Um, but if we're, prices down for the morning and then starting to move back up, if that's the low of the day, I can then recalculate, that potential top would be based on the intraday low, not just the close. But I want to kind of be mindful of both of those levels. Okay, that makes sense? All right. So we have about 3 minutes before the open. Just a reminder. So waterfall income, we'll talk about in a little bit. I'm doing day one, day two, day three master classes this week, Tuesday, Wednesday, Thursday, 1:30 p.m. Eastern time. Double ups, I'll have a video for you this week talking about one of our core strategies. We did a lot of butterfly spreads last week and double ups. I'm going to do the iron butterfly today. That was a trade that I put on yesterday. And I mean, it was a nice winner. But to be fair, I did have four trades on. So I had four trades on. I had four tiny little losers of like $30, $40, and then I had a winner of like $370. So it netted me about $300 after all the trades. But it was a nice way to participate end of day and see that thing close for full cash. The settle at 6449. I had it pinned at 6450. So I was able to get this within about 84 cents, which was nice. That was a $414 profit after fees, and then I took off my losses from the other trades, which again were total like 100 and some dollars of risk. So it was like just under 300 bucks for the day. Do you let a majority of your trades expire, set a profit target? I like the profit target, Andy. Yeah, I don't like if I'm taking like the standard daily profit play, I just stick to mechanics. 15% to 30% is our sweet spot for profit. 15 to 30%. And that's the profit target you can hit a lot. A lot. We've done the numbers. Last masterclass we had for daily profit play, we looked at the numbers of like let it go all day. Let it go all day. You're going to dramatically decrease your win percentage. Okay? So just saying, like, if I wanted to hit profits consistently, I want to win 90+% of my trades, take the profit. Take the 15%, take the 20%, take the 25%, take the 30%. There's a big difference if you scale up for, 100 trades and you take 15% every single time, when in a 0-day environment, even an extra 10 to 15 minutes, if it can give you 20%, 25%, that P&L compounding is pretty substantial. So I like that. I mean, ideally, it's like I like the 20, 25%. If you're going to stretch it to like 30%, I wouldn't go too much higher than 30%, unless you're confident the day is just going to be, pretty chill. Yesterday, I was fairly confident the day was going to be quiet. Um, I don't know, it just had that kind of had that vibe to it. Um, no, I shared that in my Randy's asked a question on the Iron Fly. I didn't post a trade um, because I took like five of them. Um, but I talked about it the entire final hour session on YouTube. That's someone posted a video for double ups. Okay, it was a Monday exactly. We know what we like to do on Mondays. Okay, opening bell here in about 1 minute. Futures market down about 0.05. Things seem to be still again pretty relaxed. And let's see what we have. So let's see if the options chain will update. Everything's live. Here we go. Okay, so I've got the prices going up. We've got my walls here, 65 and 70. Probably stick to those levels. This is an 11 delta. I'm gonna go. I'm gonna go 5 wide in this one. 65 by 70, 75 by 80. Let me get rid of these. So I'm gonna go 16 delta. I'm just gonna stick to pretty clean mechanics here. Uh, plus or minus. Wow, that's really low. Plus or minus 16. Like I don't. That's so low. We're at 50. I'm trading at. Man, that's so tight. Let's see. These deltas are a little fudged up right now. So we got a 10 and 12 delta. That's not right. I mean, the expected move should be around like a 20 delta. Okay. It's going to hang out for a second. A second. I like the kind of like selling the 70 level. That's a 12 delta. Why is my freaking what's this 10 delta doing? It's incorrect. See if this will swap back. That is a little bit better. Okay, now the 70 is a 15 delta. All right, I'm gonna go 70 by 75, a 15 delta, and 20 by 15. Try to get a dollar out of this one. Let me know if you guys can hear some sweet music outside. Let's see. So trading for 95 at dot. Let's see if we get a dollar out of this. I'm gonna let this marinate for a dollar. Oh, come on. $1.05, 95. All right. I hate to take this lesser fill, but I'll take 95 cents if they'll give it to me. All right, just got to fill for 95 cents. I'm in for a 5 wide. I'll post this in daily profit play alerts. And price is getting a little directional out of the gates. We're going 64.20 on the downside. New trade. 6470 call. 6475 call. 6420. 6415. Okay, filled at a dollar. Good, Randy. That's a good fill. Okay, so I'll make a modification. There's our close. VIX is up to 1509, which means our potential, bottom is a little bit lower. Let's see if our 64.35 level is going to show a bit of a bounce. So we come back to the 64.50. Okay, again, try not to be like a big bottom caller here. Okay, so we'll see if this structure holds. If we're still just like choppy, choppy, choppy at these highs and lows, let this candle settle and see if we just come back and forth between 35 and 50. Okay, if I went lower, 90 and 85, let me see if I can get some premium for that. If I went a little bit lower, 90 by 85. Okay, that would be from the close here. We're just above, I mean, 15, the VIX is going up a little bit, 15.1. So about a 0.94 to 0.95% move. So about 63.90 to 85. Let me see if I can get a 90 and 85. So 90 and 80. See if this one will fill for $5 and 85.75 for $5. Willing to kind of trade those with a 1-to-1 at the bottom. So I'll put those in for pending. Let's go 819 expiration, 6385, actually 6390, 6380, 6385, 6375. Okay, so pending orders right there. We'll see if price can hold this floor, hold the floor, make its way back up into where price started, maybe come back up into this positive negative gamma flip level, which is right around 64.50. So if we go down here, up here, and we get back to center, then daily prop play should be just fine. Unless the VIX is going to make a huge run to the upside today, which it is increasing. I mean, we're at 15-hour 15.12. That does open up that potential, move to these lows. I still think there's a reflexive low in a 0-day. We typically see like the market bounce. It's more likely to bounce versus like finishing at the lows. We'll see if this range can hold for the day. Okay, good fill there, David. Good fill, good fill. Yeah, those are good. Okay, so I need it's the 70 and 20, is that right? 70 and 20. Yep. So for this chart, a 70 and a 20. So 64.20, 64.70. Okay, so I want to see if price can just kind of stay inside this range to get the trade back to profit. I want to see if price will come back up and recenter. Okay, $1.20, Sean. Good, man. Now remember, like I posted the trade and my trade was delta neutral. My trade now is not delta neutral. Like right now, my put side is a 24 delta. So you're going to get a lot more premium, but you're no longer delta neutral like I was. So like my trade is more like in trouble. Your trade might be better off to recenter it. Okay. So like right now, I would look at the 60 and 65 and then the 10 and 5. This is offering $1.20. I'm going to take another trade here. Let's see if I can get $1.15 for this one. $1.15, $1.10. All right, so I got a second trade in that's more neutral, and we'll see how this price plays out. Okay, and price is coming back into center again. So I'm in for a second trade at $1.10. This is now the 60 and 10. So call side at 64.60, put side at 64.10. I went five wide on that. 64.65. Okay. So now I just kind of hang out and see what price is doing. What's the risk of assignment? Um, what trade are you talking about there, EA? 63.95, 63.90. There's no assignment risk on SPX. You're trading an index. It's cash settled. There's no assignment risk. You can't own shares of SPX. So there's no assignment risk. It's just going to cash settle. I don't know why they're warning you on that. Yeah, it was just cash settle end of day close. Maria says, why are my premiums so much lower? I'm not in the trade, Maria. It's a pending order. It's a pending order, so it's not filled yet at $5. It's a pending order at $5. Okay, so right now I'm going to get my trades organized here. This is the 70 and 75 call with the 20 and 15 put. And then the 60, 65, 10 and 5. Okay, so two positions, 1 and 2. And we'll keep an eye on things. Okay, maybe a modified low of the day based on this low at 64.35. Let's see what that 0.9495% move gets us to. If we got a top today, maybe like the 64.90 to 6,500 zone, looking to sell that level. Let's see if we can do a couple of levels on the day. Maybe. See, that's the put side, call side. If I can sell this for, say, $1.50, eh, I'll try to get $3 on that trade. We'd have to have a pretty good rip to the upside for that to play out, but we'll see. I just don't think we're going too much higher than like 65.05 today. So I'll put in maybe a $2 fill here. And if that was a 5 and 15, let's go 10 and 20. This one, if I got $1.50 out of that, I'd be okay. I want more premium, obviously, but I just don't know if we're going to get that high. Okay, so a couple pending orders there as well. I just want to see if price will stay right around here. Right around here. We can bounce here. We can bounce here. Just kind of chop around, stay in the range, stay in the range. That's the plan. Okay. John, is that a paper trading account or is that a real account? I'm asking because that seems really fast for profit. I'm down, 40 bucks on this trade, and I'm up 13 bucks on this trade. So I'm just curious, like demo accounts, they tend to like hit profit, within a couple of minutes sometimes. and the real real option chains tends to play a little bit longer. Again, no offense to demo trading, I'm just asking. Give me 1 second. All right, Andy says in 110 credit already out at 85 cents. Very good. Got it at 935. Okay. Were you delta neutral? And do you have different strikes than I did? I'm just curious. I'm jealous. I'm down 37 bucks on trade one, and I'm up on the other one, but I'm just gonna have to give both ones to play out. Andy, you're out for the hell, man. I was getting some great fills and great exits. I need time, right? So I'm in 70 and 60 and then 20 and 10. So I'll just kind of label it here so I get the visuals. 70 and 60. What? Intel just crossed $26? Are you freaking kidding me? Wow. Let's go 60, 60 and 10. 6460 and 6410. All right. So we just want to see price. Just hang out. A little indecision goes a long way. As they say, a little dab will do you. Wow. Well, my cover call at 2150, easy money. And I'm just gonna have to roll it because that is not something I'm gonna get ahead of, unfortunately. And it's fine. I mean, I've already flipped Intel a couple of times with this range. So when we came down, I bought shares over here, took profit at the highs, bought shares over here, took profit at the 23 mark, and then back down again with some options. So I think my break even's like I've got like 1,200 shares, and the break evens are between 20 bucks, 19 bucks, 18 and change. So it's fine for income. I'm missing out on this. This is what I said. Like we go from 19 back up to like 25, 26, and that's exactly what we're doing. I just didn't. I didn't do that uncovered. So anyway, it's a good move. 2150 out to next Friday. See if I can roll this a little bit longer. Let's roll this out another month. So I got 2150. Roll this out to the end of September. See if it survives. You grab another 30 cents maybe. Can I roll it up? Of course I can't. October 17th. You can roll it up a dollar and get 15 cents. That's probably what I'll do. I'll roll it to October. I mean, honestly, hell, I'll roll it out. It's just, I think Intel can go up and just rip. So maybe I'll just give some of it back. If I go October, I can roll it up a dollar and you get some credit. If I roll it out to November, December, end of the year, I rolled up a dollar and still get 90 cents on this thing. I kind of like that better. In fact, I like that a lot better. I'm gonna roll it up by a dollar and roll it out to end of the year and grab another dollar 20 on top of the dollar. So that's another 200 bucks per contract. That is, let's see, 220 times 1200. Nope, 220 times 12. There we go. So another 2640 in Intel. Okay, so I'll do that. I'll do that roll in Intel. Let's roll this thing out. A dollar. We get $1.15 on a roll. $1.10, hopefully. Filled at $1.10. All right, I'm gonna do some rolling right now. Does anybody own the shares with me? This is a trade I took for Project Options Edge. We bought some shares. This is going to be a campaign trade. So I'm going to roll this thing out to January and roll it up to $1.20. I'm going to roll it up a dollar from 21.50 to 22. So I'm getting 50 cents increase plus the $1.10 filled. So I'm just rolling my covered calls and I'm going out in time. I'll give it some time. I think we can stay, pretty bullish till the end of the year. That's kind of the plan. So let me get these rolled out while we're waiting for daily profit play. So it's up to 22, $1.10, 22, $1.10, 22, $1.10, $1.14. I'm getting slightly better credits, which is nice. $1.20 maybe? $1.15? Filled at $1.15. Okay, some good credits. All right, let's get these taken care of. Just roll in, roll in, roll in. Okay, no Intel there. Couple more accounts. No Intel. Intel on this account. No, that one's pretty new. This one is pretty new, pretty new, and pretty new. Okay. So now just updated my positions. All the shares, I've zeroed out all of my 2150s for August, which is August 29th. That's next Friday. I've zeroed those out and I've rolled those up to 22 and out for another dollar 15. Dollar 15. So I'm gonna update that in my tracker. So that's a 116 expiration and up to $22 for $1.10 credit. So new break even, 1941 on one account. And other accounts 1905, 1959, 2096, 2043. I'm just going to update all of those and write those down. So I've got a 2096. I have a 2043. I have a 1959. And I have a 1905. All right, take $1.10 off all of those. That'll be rolled out. Okay, so that would be 19.86 and 19.33 and 18.49 and 18, actually 17.95. Cool. So net on those trades. So basically on those trades, I'll just do the average here. So 1986 plus 19.33 plus 18.49 plus 17.95 divided by 4. So that's an 1890 position that I get called away for 22. Um, that's a $1,200 gain. The other one's kind of similar. Break evens in 19s. You get it called away at 22, make 200-300 bucks per share, or per, I guess total for the trade. It's like $2 or $3 a share. So because it's, and this is what happens. I think this is a good lesson to understand. Covered calls are great. Okay, covered calls are great, but if you want all the upside appreciation, you don't sell covered calls. So you can't get mad when the market does something like this. I mean, Intel is up 37% in like 2 weeks. Okay. Intel is not necessarily the greatest income generator. It was a good buy trade that I took many times here. Like I bought the lows, took profit, bought the lows, took profit, and it was another range trade. I just didn't want to hold it because I thought, well, if we're having this issue where I'm in a dollar cost average, I was going to buy it here around 19 bucks. I was going to buy it again at $15 and then wait for a range trade back into the 20s. Once I bought it here, but it was going down, I'm like, oh, I'll just sell a call in case it doesn't fill that earnings gap because that's why it dropped. So anyway, long story short is we're up 37%, but I started to sell calls at 2150. Okay. So selling calls at 2150 means I capped my upside. So what I can do now, because price is way above my 2150 sell call, I'm just going to roll those calls and get more time, and that time will turn into more premium. Okay. So if I can't sell the price that I want, i.e., I can't sell a call at, 26, 2650, and I can't stay ahead of price or above price, then I can just use my in the money call and just keep rolling it month after month after month and turn it some income. So the longer I want to hold it, I'm essentially just getting premium for holding it longer, and that's kind of the nice thing is the brokers will allow you to do that. So there is kind of a trade-off. Ugh, this freaking construction, man. There is kind of a trade-off sometimes where you can there's a trade-off where you can roll your calls like what seems to be like month after month after month. And then there's a point where I'm like, why am I rolling this thing for like 10 cents? That's not really worth it. So if I ever have to roll for a debit, or if I have to roll where it just doesn't seem like I'm getting any type of like meaningful credit, then I just stop rolling it and I'll just let the stock get called away. Okay. So, and like I said, in a perfect world, we never get called away on our shares and we only see prices go up, but obviously that's not real. I don't mind using, the stock, the ownership, selling calls as an income generator. But sometimes we get, um, sometimes like price will rip like this, and all of a sudden, all we can do is all of a sudden our cover calls are in the money. And rather than just like, oh fudge, I'll get it called away at 2150. Well, I go out a little bit further in time. I roll up my strike price, and so I can see the increase in my strike price. So I went from a 2150 call. I'll just type this out. I went from a 2150 call, 2150 sell call. So what I did is I rolled up in strike and I rolled out in time, and I was able to get another $1.15 and an extra 50 cents in strike price. So that's $1.65 per share more profit. So rather than letting the shares get called away, I'm making $1.65 more on all of my shares. So $1.65 more on 1,200 shares. I'm making almost an extra $2,000 by just letting price, like holding it longer in my portfolio, which is okay. An extra 2 grand to sit on December, January expirations, like I'm okay. If Intel rips up to like 38, $40, I mean, okay, I can't complain. I can't stay ahead of that. But if it stays above $22, I'm totally fine and I can keep rolling this thing. So if I want to carry this into Q1 next year, I could roll it out another 30 to 40 days and maybe grab another 50 cents, maybe even roll my strike up another 50 cents to a dollar. So there's a way that I could possibly increase my net position to add like maybe $2, maybe $2.50 more profit. Okay. It's not perfect, but it's certainly make an extra 2 grand to sit on this thing for 3 more months versus just let it get called away. It's like, oh, fudge. What a great move. I missed it. It's like, well, use it. Use the ownership. Because now the likelihood of us coming back to $22 is a lot slimmer. Make sense? Um, all right. Dave, you're out 2 for 3. Very nice. Looking for the third one. Yeah, well, I can hear that construction. It's super annoying. And there's just dust that comes into my freaking window every day. At least until like next spring when they're done. There's still like 6 or 7 buildings are finishing, and one of them is right across from us. So when that one's done, then that stuff will hopefully stop. David, I'm seeing your question here. Do you ever buy back one side of the spread and then re-enter? Rarely. For a 0 day environment, you're usually right or you're wrong. It's hard to have like a backup plan in the same trade. So rarely would I just close out one side of the trade. I look at it this way. The day of trading, I mean, honestly, today is like pretty perfect, even though we had a lot of volatility in the first, 5, 10 minutes. This is now almost 30 minutes of complete indecision, right? Where are my prices? It's right in the middle where I need it to be. Okay. I have a call wall here. I have a put wall here, and we're right in the middle. So it has enough time passed for my trades to be profitable. Let's find out. I haven't set the take profits yet, but here's one that's now positive. Here's the other that's up 23%. I'm going to ride these out a little bit longer, right? Collectively on the two trades, if I can grab, 70, $80 for the day total, like that's a good daily profit play. 50 to 100 bucks is my sweet spot. I don't want to risk a lot of money, but I know I'm not risking a lot to make something pretty consistent. 50 to 100 bucks a day, 50 to 100 bucks a day. And then as the day unfolds, maybe I get a couple more trades that I like. But to your point, David, I don't close like one leg of the trade and try to manage the other side. I usually just open it together, close it together. And if I wanted to open up a new trade, I just open up a new trade. So I give myself flexibility where, I'm probably able to trade anywhere between, up to 5 contracts a day, 10 contracts a day, and sometimes those are all individual trades. Because my goal is the idea is I want to be able to be confident in if I'm selling high, I don't want price to be at those levels. If I'm selling low, I don't want to be at those levels. I'm essentially trying to have like my tops and bottoms safe for the day so I can collect as much premium as possible and do it safely, right? Okay, so I'm going to go ahead and set some take profits now. This one for 95 cents, I'll go ahead and set this one in at, let's go 45 cents. And this one in for $1.10. See if I can close this one out at like $60.10. Let's go 70, 70. See if time just cooperates a little bit farther. So I'm going to go after a little more aggressive take profit, but price seems to be pretty good so far, just kind of staying between our choppy levels. So right here, back and forth between this positive, negative gamma flip level, and we'll see if price just kind of bounces around. Right? So, I mean, if this one was up a little bit more, if each one of these were up like 25 to $30, I'd probably just take the profit. And to be safe, that's probably the smart thing to do. Is this one it looks like it's pretty well centered to have like a slightly bigger take profit on that second trade I took. This one is probably smarter just to get out at just a decent a little winner. So that's 70 cents. I'll go 80 cents. 80 out of 110. So that's a 27%. That's right there. Let's stick to the rules. So I'll go after 80 cents in this one and see if that fills while we're talking. Okay, and the other one I'm going to go after a little bit better take profit. That was 95 to I'll go 50. Okay, so that should be 30 and 45. So it'd be 75 bucks on the day. And then if the day unfolds and gives me another entry, another opportunity, then I'll take it. Whether it's selling high, whether it's selling low. If it stays in the middle, I might just, make the 75 on the day and call it a day. Okay. All right. So we'll let this continue to unpack. Hopefully some more indecision is good. I'll be watching on my other screen. Right around this like positive negative gamma flip level would be fine. Let's keep an eye on this. Okay. Really quickly as we technical Tuesday, I'll just highlight this again. Going back to SPX, I don't know what the catalyst is going to be. I would be a little surprised to see the market, like busting out to new highs through this week or next week. Yes, we have Nvidia earnings next week. Um, I could see just so much riding on that the market is sideways at best. So I mean, look, if Nvidia is sideways, if Mags is sideways, I don't see the market going excessively higher if we're not getting any love. Look at this freaking push to the upside, 64.55, you idiots. All right, well, we're going to see what's up with our levels. I want to see if I can get filled to this like 6,500. It's got to come up quite a ways though for that to happen. So we've got some pending orders. So let me check these really quickly. Yeah, these are still way out of the money. So that 60 level, hopefully the 60 holds. 50% ATR, is that where you're going? 64.70 is at 50%. So this gamma level could certainly be tested today. So we've got 60, 65, and 70 could be tested. And then I'm hoping that we come right back down to this like 64.50. So I'm not going to chase. I'll just let the trades work out, monitor my positions, manage my risk. Most important thing. All right. Going back to this, NVIDIA has overbought conditions with divergence. Last time we've seen that was over here. You can see that we had a top. Last time we had that, we had a top. This indicator doesn't print very often. When it does, I tend to pay attention to it. I could see at least a bit of a shakeout in NVIDIA. Obviously, a dip would be amazing. If the market pulls back to NVIDIA, this is a low, a high, 23% pullback, 30% pullback, 38% pullback, previous all-time highs. If somehow this offered any type of dip or pullback, I'm sure for many, you could take that trade right back up to the highs. So if we pull back to like 160, 150, 140 or so, taking that trade back to the highs would be a pretty good discount on Nvidia. Okay. It doesn't mean we're going all the way back down. I don't think the competitive advantage of Nvidia is going away. This country and this world are riding AI and tech so hard right now that I think if we have any dips, it would be good to scoop them up. Now that being said, do we gap higher with a blow off move because we crush earnings again and it becomes a fade like Microsoft did? You look at Microsoft, same thing happened. Microsoft killed earnings to the upside and then faded. It's down 7% from earnings. I could see Nvidia doing the same thing. So if we poke 65 and change on the S&P, because Nvidia is like 8% of the concentrated S&P market cap right now. It's crazy, crazy high. I don't think it's ever, maybe there's been one other stock that's been that high concentrated. Like, I don't even know when it was. It was a while ago. So anyway, if it blows through earnings, but then fades right after, the reality is whatever happens on Nvidia is likely dragging the market with it. So if Nvidia goes down, the market's going down. If Nvidia goes up, the market goes up. If it gaps and then fades, it's going down. So whatever happens here, S&P is doing the same thing. NASDAQ's probably doing the same thing. Okay? So that's kind of the big picture where we're at. I do expect us to see a bit of a correction. All these it's like crazy similar how all these are lining up. 50-day moving average, previous all-time highs, 5% correction. That's at the minimum, that's kind of what I'm looking for. At the maximum, we could probably come down to like, 10% if we poke the 144, the 200 moving average, but there's a lot of dynamic support right in here, where the market can scoop up any type of dip and then take it right back to the highs. Any type of dip, right back to the highs. Okay. But I think we're gonna have a flush to that level at some point. I just don't know if it's end of this month before we're done next week, or we go into September and this is all about like pricing in the Fed rate cut and all the drama that's happening around the Fed. I don't know yet. Okay. And again, just a quick reminder today at 1:30 p.m., I'll be doing day one of my masterclass workshop for waterfall income. We have two core strategies we're going to be discussing this week. I outlined those yesterday in the live session. We have quite a few positions that are running right now, which are fine. We get a couple pending orders, and I just want to make sure that we're kind of deconstructing every trade. This is my favorite low maintenance passive income strategy that can also serve as probably one of my favorite and easiest retirement strategies. I'm 43 right now. If I'm 55, 60, this would be one of the easiest trades to be focused on, and also probably a pretty safe way for me to generate 8 to 10% a year without taking a lot of risk. Okay, so it's like it not only is it just a good income strategy for me now and just consistently growing, but if I wanted to like heavily rely on something that's way less risk and nice consistency, this is a great strategy. Okay, so I want to talk a little bit more about that. Let's do that now. Okay, and then we have a class this afternoon at 1:30 p.m. So if you want to jump into the master class, then you can sign up for it today. Okay. All right. So waterfall income, we have an 11-year, now 12-year study that's over 540 trades, 97% win rate. Our live trades, we've taken over 100 live trades. There's some that are still running. We're over 100 live trades in the service. Our winning trades, we've logged almost 93% winners. Same whole time, like anywhere between 11 to 20 days. All right. Can't guarantee any specific future results. There's always risk in trading. We know that. Don't trade with money you can't afford to lose. Check out our terms and conditions on our homepage. Me in the markets is trying to give myself an edge to make money. If I can do that and I can find a way to make money, I can share that with you. That is our edge that we collectively have. If you're not comfortable trading real money yet, trade a demo account. If you're not comfortable trading real money and having the emotional swings of wins and losses, trade smaller if you're trading with real money. Okay, once you get over this kind of emotional hurdle of the ups and downs and the ebbs and flows, look, no one winning trade is the reason that you're the greatest trader in the world, and no one losing trade is the reason you're the worst trader in the world. It's just a trade. Manage risk. It's just a trade. Keep trading. Okay. All right. Thanks for being here. As always, every single day, I love showing up to the Daily Profit Plan room, watching this room grow, and helping traders trade. Okay. In nearly 30 years in the markets, you know that I trade everything, and I've logged tens of thousands of hours. I've certainly seen a thing or two. We can go through all the major levels. I mean, I've traded through the dot-com bubble, the great financial crisis. The last 12 years, we've seen seven. In 12 years, we've seen 20+% corrections in the market, and we still found a way to make all-time highs. Okay, so I've seen a lot of things, and what's been happening, like this year especially, these last 6-7 months, it's been pretty nuts. In short, the governments around the world have been pretty reckless, and also proactive. They're coming off of like austerity programs and spending money. They're stimulus like crazy. China prints 5 trillion yuan to support the real estate market and stock prices. Germany comes out of austerity and starts spending to boost defense. Trillions of dollars. Okay, the U.S. we're spending like it's deficit crisis mode, and we've been doing this for like 7 straight years. U.S. government debt is skyrocketing. We know this. No sign of slowing down. Trump's all about growth. All these lead to inevitable outcome, and we're probably going to see the signs of this. We've seen it print CPI and PPI. We're going to see it in PMI this week. Most likely, we're going to see